This is Tim Chase and welcome to FHA. In a nutshell, we're going to take just about 4 or 5 minutes here and try to cover the entire scope of FHA. Please contact me directly if you have any questions beyond the video. Now, FHA has a lot of benefits. It also has some downsides. We're going to cover all of those. With FHA, it's important to know it is the Federal Housing Administration. And FHA was created in 1934 to help increase home ownership throughout the United States. It would need to be created because in 1934, loan terms for home buyers were very difficult. Loans were limited to about 50% of the value of the house, and loans would balloon in about 3 to 5 years. That really increased foreclosures. Only about 4 out of 10 households actually owned homes in 1934, and it became part of HUD in 1965. Now the question is, what does FHA do? You can think of FHA as an insurance company. They insure the lender against loss in the event that you don't make your payment and there's a foreclosure. Now, it's important to know that FHA is still a regular mortgage, it just happens to have the addition of FHA mortgage insurance on it. Now, what programs are available through FHA? We look at a 30-year, 15-year, all your basic loan programs. Now, not all of these are available through every lender, so you do want to check with your loan officer to make sure they offer the one that you're looking for. Property types. Property types are traditional primary residence, single family condos. The condo unit does have to be an approved FHA condo unit, so double check with that. You can also do manufactured home, and they do have some property flipping rules. Now, the benefits to FHA are many. You have a lower down payment. The down payment can come from a gift from many sources, an employer, labor union, a relative, and there's a few guidelines though. You can't get it from the builder, you can't get it from the real estate agent, you can't get it from the lender. It has to come from somebody who has an interest in you. They have a lot more relaxed debt to income ratio guidelines as well, so if you have higher debt to income ratios, FHA might be the way to go. Credit score requirements, a lot more relaxed. You start with 580. Most lenders, however, about 620 to 640. Now, a couple more benefits. You have non-occupying co-borrowers are allowed. So if you want to buy a condo for your child as they go to college and put them on the loan, you can do that. The child does not have to be employed. They can go off of your income. Better interest rates traditionally than conventional loans as well. You also have more relaxed guidelines on bankruptcies, foreclosures, and short sales. So if you've had any of those in recent history, you might want to look at FHA. The seller can contribute up to 6% of the purchase price towards closing costs and escrows. Now, there's a couple downsides to FHA. As everybody knows, your mortgage insurance premium is similar to PMI, private mortgage insurance, on a conventional loan. The MIP, however, is a little bit more expensive than PMI, and the real kicker is it never drops off of the loan with FHA. It will be as part of your loan throughout the entire term of the loan. I'll give you an example. $175,000 loan requires about $197 a month as mortgage insurance. And that, again, will be part of the payment throughout the course of the loan. The other part is they have a second level of mortgage insurance. It's called upfront mortgage insurance premium, or UFMIP. Now, UFMIP adds an upfront cost. Now, usually you don't pay that out of pocket. It's wrapped into your loan. But as an example, $175,000 loan will require a $3,000 upfront payment to FHA in order to initiate that mortgage insurance premium. And again, it is wrapped into the loan, so a lot of people don't experience that right off the bat, but it is part of the loan. Now, what does FHA payment look like? It's just a traditional mortgage, principal, interest, taxes, insurance. However, you have the increase with the mortgage insurance premium. It's the only addition to that. Now, generally speaking, borrowers cannot have any recurring debt issues in the past 12 months. If there's no credit, then most lenders like to have a verification of rent and a few alternative trade lines with a little bit of history. And if you're using any other sources of income, child support, retirement, you do need to document additional information on that as well. Check with your loan officer, see how they look at that. A couple other things to look at is no delinquent federal debts. All your judgments have to be paid, and if you live in a community property state, then your spouse's credit will be part of that loan. So double check to see if you're in a community property state. All funds being documented in the past 60 days need to come from an acceptable source. What that means is if you have any random deposits in the last 60 days, they're going to know where those came from. Make sure you're not borrowing extra money. Now, employment, just like every other loan. 2 years history. If you're commissioned, they want 2 years history. Self-employed, they want 2 years history. Retirement, you do need to document that. Any past issues. Foreclosures, for instance, they want a 3-year history from the trust deed date. Short sale, we're looking at 3 years from the completion date. Now, if you don't have any delinquencies on that short sale, you may have a little more leniency from the underwriter. So again, double check with your loan officer, see how they view that. Chapter 7 bankruptcy, 2 years from the discharge date. Chapter 13, yeah, you can actually jump into a loan right after you get out of a Chapter 13. In fact, you can get into a loan when you're still in a Chapter 13 as long as you have a 1-year clean payment history and the court approves you to do so. FHA appraisals are a little bit more stringent than traditional appraisals. The home has to be habitable, no exposed wiring, cracked windows, chipped paint, nothing like that. No inspection is required, but we do recommend getting one. And again, if we go a little faster in the video, please come back and view it again. Be able to get a lot of good information. Now, looking at manufactured homes, it has to be permanently affixed. It can't be on wheels. And if you share a well, only 4 people can be on the well. Private roads, you have to have a maintenance agreement. The home has to be manufactured after 1976, and the home cannot have been moved from the original site. Property flipping, FHA has a temporary waiver on the first 90 days. It used to require the contract date to be after the 91st day. However, HUD does have a temporary waiver period on that rule right now. A second appraisal is required if there's a 20% increase in the first 90 days. It must be an arm's length transaction. Now, if the value doubles after the 91st day, all the way up to the 180th day, and some banks all the way up to the first year, a second appraisal will probably be required. Additionally, you're probably going to have to document all the improvements that were made. The lender will most likely require that an inspection be done in their name. So before you go and order that inspection in your name, double check to see if they're going to be ordered one in their name. Also, if the property is bank owned or foreclosed upon, you do not have to worry about the property flipping rules. 203K loans, that's a repair and renovation loan. FHA allows buyers to go in and spend at least $5,000 up to $35,000 and make that house more habitable. Repairs must add value to the home. You can't buy sprinkler systems, furnitures, window coverings, decorative items, and such. All work must be done by a licensed contractor. And there are slightly longer processing times for 203K, so be prepared for that. Okay guys, that was FHA in a nutshell. Thanks a lot for listening. Please contact me directly, 719-231-4893 with any questions. Thanks, have a great day.